and happy Friday. I hope you had an amazing week. I know I did. Thanks for joining me today for the latest weekly Market Insight series coming directly from the Capital Markets Trading Desk at SunWest Mortgage Company. So let's get into it. It has been a whirlwind week for markets. Treasury yields climbed following a Treasury Department auction, which was met with weak demand, with the 10-year Treasury note yield topping 4.6% on Wednesday. On Wall Street, the major averages suffered losses this week, but remained on course to have a winning month, with the NASDAQ 100 jumping 7% and the S&P 500 up 4% in May. U.S. economic growth slowed down considerably at the start of the year. According to the second estimate released by the Bureau of Economic Analysis, U.S. gross domestic product increased at an annual rate of 1.3% in the first quarter of this year. The increase in gross domestic product was the smallest in almost 2 years after being downwardly revised from the first estimate of 1.6%. The biggest contributors to the drop in GDP were a wider trade deficit and lower production of goods or unsold inventories. The Conference Board Consumer Confidence Index increased to 102 in May from a revised 98 in April. It beat economists' forecast of 96, and it was the first increase in the index after 3 consecutive months of decline. The Present Situation Index, which is based on consumers' assessment of current business and labor market conditions, went up to 143 in May from 140.6 in April. Meanwhile, the Expectations Index, which looks at consumers' short-term outlook, jumped to 74.6 from an upwardly revised 68.8 in April. Nevertheless, it remains below 80, the threshold which usually signals recession. According to the Richmond Fed Manufacturing Index, manufacturing activity improved during the month of May in the 5th Federal Reserve District. The index rose to 0 in May from a -7 in April in the Mid-Atlantic region, ending the streak of 6 consecutive negative readings. Shipments increased from -10 to 13, new orders increased from -9 to -6, and employment fell from -2 to -6. Rising rates brought an end to mortgage applications' 3-week winning streak. The average 30-year mortgage rate climbed for the first time in 4 weeks up to 7%, leading MBA mortgage applications to fall 5.7% for the week ending May 24th. Refinance activity crashed by 14% from the previous week, but was up 12% from a year ago. Purchases were down 1% from the week before and were down 10% compared to the same week last year. Even with increased inventory, escalating mortgage rates throughout April caused pending home sales to plunge. According to the monthly index released by the National Association of Realtors, contract signings dropped 7.7% to 72.3. It's the lowest reading in 4 years. The decline was steeper than expected as rising home prices and mortgage rates seem to have buyers pulling back on signing contracts on homes for sale. The number of Americans applying for unemployment benefits ticked up last week. Initial jobless claims rose to 219,000 for the week ending May 25th. It was a 3,000 claim increase from the previous week's 216,000 revised level, beating the 217,000 forecast. Continuing claims increased by 4,000 to 1.8 million the week ending May 18th. And I'm sorry I have to leave you here, but that's it for this week. If you like this video, stop what you're doing right now and please hit that like button. It truly helps support our channel and we appreciate you. So join me on Fridays here to stay updated with the world news. Our trading desk will have the latest information about our pricing incentives, so stay locked in and never miss out. Have an amazing weekend, everybody. Buffy out.